Hello and welcome. This is Kathleen Oviedo, and I'll be your host for today's webinar entitled Tips for Life Insurance Beneficiaries, Understanding the Claims Process. Joining me today is Lynn Babin, Manager of Member and Survivor Benefits at AAFMAA, and Mike Cummings, Team Leader for AAFMAA Survivor Benefits. And they will be sharing just about 30 minutes of slides for you today. We'll conclude today's presentation with a question and answer series. If you have any questions during the presentation, please feel free to enter them into the question bar. AAFMAA stands for American Armed Forces Mutual Aid Association, and is a long-standing, not-for-profit association that empowers military families with affordable financial solutions. We accomplish this by being the premier provider of affordable life insurance, expert investment management, customized residential mortgages, and exclusive survivor assistance services, all for the military community, not for profit. This presentation is educational. It's for general information only and is not specific legal or tax advice for any of you individually. Do not rely on this presentation alone to guide your life insurance decisions. Since each individual situation is unique, the life insurance that benefits you the most will not necessarily be the same as another current or former service member. For individual advice, please contact us directly. We produce this webinar series in-house for our own professional staff as a service to our members and help them better understand the resources that are available to them. I'll now go ahead and turn it over to Lynn, who'll go over the agenda.
Thank you, Kathleen. Mike and I are happy to be here today. We have been helping military families for over 18 years, and we are passionate about what we do. So today we're going to talk about topics that most only deal with once in their lifetime: choosing your life insurance beneficiary, filing a life insurance claim, and military survivor benefits. Life insurance is interesting. You buy it in hopes that you don't have to use it, but if you have to use it, it's not actually you who uses it, it's your beneficiary. So choosing someone to receive financial compensation in the event of your death is not always as easy as it sounds. Since you will not be around to hand the money over to your loved ones yourself, Mike and I will address the following topics to make sure your final wishes are fulfilled. We're going to talk about choosing the right beneficiary, common mistakes to avoid, life insurance claims process, essential documents for survivor benefits, and finally, critical communication. So, naming your beneficiary. Determine who you want to help. As I mentioned, you don't buy life insurance for you. Rather, you buy it to provide financial support to someone else. Some people want to leave money for their spouse or children after their death. Others may use it as a life insurance policy to pay their funeral expenses, finish paying off an unpaid debt. Think about whose welfare you're most concerned with and narrow down your choice of beneficiaries from there. So consider your beneficiary's circumstances. Sometimes your decision to make someone a life insurance beneficiary could cause problems for that person. Say a family member is disabled and their income level allows them to qualify for certain government benefits. If you make them your beneficiary and they receive a life insurance payout, their income may increase to the point where they no longer qualify for those government benefits. Know your options. Your beneficiary doesn't have to be a person. A trust or a legal agreement that lets you place property under the control of a trust manager can be named a beneficiary. A charity, your alma mater, is a good choice if your family is financially taken care of and you want to create a legacy after your death. While you can legally make your estate your beneficiary, it's not always recommended. In some states, creditors can go after that property as the estate, including the money from a life insurance policy. So verify your state laws. If you're not sure, ask a financial or insurance professional. Consider a contingency beneficiary. When you assign a beneficiary to your life insurance policy, you make an assumption that that beneficiary will outlive you, but that doesn't always happen. So a contingent beneficiary is a secondary choice who would receive the policy benefit in the event that the primary beneficiary passes away. So what happens if you don't designate a beneficiary and you neglect to designate a person, or all your beneficiaries have predeceased you? the life insurance proceeds will be paid to the policy owner's estate. If that happens, the probate court will decide how to handle the funds, and this could take a while and possibly chip away at the proceeds. So in order to get the money into the hands of those who need it as soon as possible, designating a beneficiary is the way to go.
So Lynn, what are some of the common mistakes that are made?
Yeah, thanks, Mike. So it's natural for parents to want to leave their money to their children in the event of their death. But it's not enough to simply name your underage child as your beneficiary. The life insurance company will not pay the proceeds directly to a minor child who's under the age of 18 or 21, depending on the state you live in. The money would have to be paid into a trust or to a designated guardian. If you don't designate a guardian or set up a trust, the court will decide who will manage the money for your children, which may or may not be the person you had in mind. Making the beneficiary ineligible for government benefits. Naming someone such as your child with special needs as the beneficiary the beneficiary may put them at risk for losing eligible government assistance. Anyone who receives a gift or an inheritance of more than $2,000 is disqualified from supplemental security income and Medicaid. We suggest you consult with an attorney, as you may need to set up a special needs trust and name the trust as the beneficiary. So there are many reasons why you want to change your beneficiary over time. Designating beneficiaries for your life insurance is not a set it and forget it event. You should review your policy regularly. After major life events such as a marriage, having children, the death of a loved one, a divorce, the role of your beneficiary is also important. AAFMAA members can view their policy information on their annual statements on our member center. So naming only the primary beneficiary or no beneficiary, you run the risk that your primary beneficiary predeceases you, and you could result in no beneficiary designation. So as I mentioned earlier, if you neglect to designate a beneficiary to your life insurance proceeds, will be paid out to the owner's estate. The other common mistake is assuming that your will supersedes the policy. Another misconception is leaving someone the life insurance policy in their will without making the designation in the life insurance contract itself. So you must officially name the beneficiary in the life insurance contract, because that designation will prevail even if your will says that you would rather someone else receive the money. A life insurance policy is a contract, so regardless of what your will says, the life insurance money will be paid to the beneficiary listed on the policy. And don't stay mum. Whoever your beneficiary is, make sure they know. Tell that person that you have a life insurance policy, that they are the beneficiary, the name of the insurance company, the policy number, and where that policy is located. Open communication with your family, and beneficiaries now can save your family from chaos later, or even worse, never claiming the benefit. So right now I'm going to invite Mike to address what should a beneficiary do once the insured passes away.
So it's a great question. So knowing what to expect and being prepared beforehand will make the claims process much smoother, and to prevent delays in getting much needed financial support at the time of your loved one's passing. First, you need to get in touch with the life insurance company. Most companies have online death notifications on their websites, like we do here at AAFMAA. You let the company know about the death so that they can begin the process. They will need to know who you are, what your relationship is to the insured, the date of death, and sometimes the cause of death. If you're an AAFMAA member, we will ask if the death was service-connected, as it may offer additional benefits. With the claims process, there are 3 documents you will need in order to claim the death benefit. You'll have to provide identification. The insurance company will require proof of the beneficiary. Photo ID is required, as well as your name, date of birth, social security number, and address. More documents may be needed, such as a marriage certificate if your name is changed, or trust documents if the beneficiary is a trust. The insurer will also need an original or certified copy of the death certificate. This proof of death ensures that the policies are being claimed legitimately and helps prevent fraud. After the identification, you'll have to complete and sign the life insurance claim form. You'll fill out the information regarding the insured, including the policy number, date of death, and sometimes cause of death. You'll also fill out information about yourself as a beneficiary. You'll send this form along with the death certificate and identification back to the insurer, and they'll take it from there.
Thanks, Mike. So once the insurance company receives the claim form and supporting documentation, they will perform a few basic checks. They will make sure the policy is active and in good standing, make any adjustments to premiums if the death occurred prior to a premium payment. Companies will cross-reference your information with their records to make sure you're making a claim on the correct policy and you are the designated beneficiary. The insurance company will make sure the policy is beyond the contestable period. If the insured dies within the first 2 years after the policy was issued, the insurance company has a right to contest or question the claim. They will investigate the original application to make sure the underwriting decision was based on accurate information and the insured did not commit a fraud. The payment of the death benefit will be delayed if there is an investigation. Verify the death of the insured and the identity of the beneficiary. The original death certificate is proof of that the insured died. However, sometimes the insurance company will move ahead with the claims process and wait for the original death certificate to make the payment to the beneficiary. They will also verify the identity of the beneficiary again, and some companies will perform a verification of the insured and the beneficiary. So if the primary beneficiary is deceased, the insurance company will need a copy of the death certificate. Then the contingent or the other beneficiary will be claiming the life insurance proceeds. The other thing they're going to check is to make sure that the claim form is properly completed. Each beneficiary has to complete their own claim form, and the insurance company will do their verification and ensure the identification is accurate. So there are delays that can occur and are oftentimes part of the verification process. The insurance company cannot locate a beneficiary, and if that's the case, it's important that the policy owner informs the insurance company of any changes to their beneficiaries. Maintain contact information on their beneficiaries. Insurance companies do make an effort to find beneficiaries. Some go as far as hiring private investigators, as AAFMAA has done in the past. But in the event of an insurance company cannot locate the beneficiary, the insurance proceeds may be turned over to the state. And that's not something you want to happen. So if the death of the insured is a result of a homicide or an accident, insurance companies will conduct further investigations to ensure there is no fraud. And if you can't find a death certificate, just to let you know that a death certificate is an official government-issued document and can be requested through the Vital Records Office from the county or the state of the deceased insured. And there are different ways to receive your death benefit. Settlement options is an alternative way of receiving the life insurance proceeds. Depending on the insurer and the plan, there are a few ways you can choose to receive the money. The most common is lump sum, where you'll get the entire death benefit at once. You'll receive the full death benefit and you can use it as you need. However, we have found some beneficiaries don't like this option, as it may mean having to manage a large amount of money, which can be overwhelming. An annuity payout or settlement options, these are installment payments that allow the beneficiary to be paid incrementally throughout their life as a life annuity or as a 10, 15, or 20-year period certain. Many people prefer this type of payment because it spreads the money out over time, ensuring that they have a steady stream of income replacement. The other one is interest only, and that's where the entire life insurance principal is left with the insurer. The insurance company will pay a monthly interest amount on that principal, allowing the beneficiary flexibility to access the funds as they need. With a period certain, or interest-only payment, the claimant would elect a beneficiary to receive the remaining unpaid proceeds if applicable. So I'm going to leave you with one action item. Talk with your family now. We strongly encourage you to discuss your wishes with your family. Let them know about your insurance policies, beneficiaries, and contact information for these policies. And now I'm going to turn it over to Mike so he can talk to you about our survivor benefits assistance.
Thanks, Lynn. So with survivor assistance, we are the point of contact for your loved ones after you pass. We will assist with notifying Defense Finance, the retired pay, and get that stopped. We will notify the VA as well and stop any disability compensation. We will then assist the family with filling out any Defense Finance or VA forms, such as the survivor benefit plan, the VA disability, or burial allowance to make sure that your family gets taken care of. We will then help the family file and claim any life insurance policies here at AAFMAA. Now, to assist in this process, here are some of the important documents that we want you to keep with AAFMAA so we can make sure to expedite any claims with Defense Finance or with AAFMAA. The first one being the DD-214, or Record of Military Service. This is especially important if you want to be buried in any veterans or national cemeteries, including Arlington National. We also ask that we keep any marriage or divorce decrees, any trust documents, especially if you have a designated trust as your beneficiary, and any power of attorney or will paperwork here at AAFMAA. Other important documents include your last retired pay statement. This can inform your family as to any allotments you're paying to make sure we pursue all companies that we might need to notify, as well as any VA disability award letters for any VA claims, and any other life insurance policies that you may have. So on to critical communication. As Lynn had mentioned before, communicating everything that's important to your family before you pass. Does your family know where important documents are stored? Do they know who to call after your passing? Do they know what funeral arrangements you want? This includes wishes about any military honors for your burial, or the location of where you want to be buried, and any other information such as your wishes on an organ donor program. And to assist with this communication, we also offer the AAFMAA Survivor Assistance Checklist available to you and your family.
Thanks, Mike. So in summary, we talked about designating your beneficiary, understanding the claims process, discuss with your beneficiary what your plans are and what you would like to do. Identify and safeguard the important essential documents for military benefits and entitlements. Discuss your plan with your family. And as always, AAFMAA is here to help you and your family. Call AAFMAA at 800-522-5221. Select option 2, and then select option 2 again for member benefits. Thank you.
Great, thank you. That was very informative. We did have a few questions come in during the presentation, so let's address those. What if a trust is the beneficiary?
Great question. So if you have a personal trust, most insurance companies will require the essential trust pages be sent in before they will pay out. That's why we ask that you send them ahead of time. These essential pages list the name of the trust, date of the trustee, and or the successor trustees. The insurance company will then pay the trustee for the benefit of your trust. Some companies may require additional paperwork, such as affidavits for that, but usually it's just the trust documents.
Can you explain per stirpes?
I'll take that question. Sure. Per stirpes designation means that if a named beneficiary dies before the insured dies, the children of that named beneficiary are entitled to the benefits, or the grandchildren of that named beneficiary if the children are not alive. It means the proceeds are divided by the branch of the family.
What is common disaster?
Another great question for beneficiary designation. A common disaster clause is a provision in some life insurance policies under which the primary beneficiary of the policy must survive the insured by a certain number of days to qualify to receive the policy benefits. This can help avoid a situation where the policy proceeds are paid to a deceased beneficiary's estate rather than the contingent in the event of a common disaster.
Is the death benefit taxable?
Great question, and it's one we get a lot, especially from our beneficiaries. In most cases, and life insurance death benefits are not taxable. But as always, if you have unique circumstances, anything like that, we always recommend that you consult with a tax attorney and professionals to make sure that your estate qualifies.
Great, thank you. If we didn't fully answer your question, or you think of another question later, please reach out to us at memberbenefits@afma.com. We will respond within 2 business days. We'll go ahead and break here for now. You can reach us whenever you need to. Please don't hesitate to ask for help. We do this every day for a military community, and it is our pleasure. You can always register for future webinars and review past webinars at afma.com/webinars. Speaking of future webinars, be sure to join us for our next webinar on May 10th, when our colleagues from AAFMAA Wealth Management and Trust will present. If you found this presentation useful, we encourage you to please share it with your friends and family. Our membership grows stronger every year because you introduce those in your military community to AAFMAA. Thank you again to everyone listening. We look forward to our next opportunity to assist you.